This presentation is made possible with support from the New Jersey Recovery Fund, Geraldine R. Dodge Foundation, Community Foundation of New Jersey, and the Rita Allen Foundation. For those of you who are unfamiliar with the Citizens Campaign, we are a nonprofit, nonpartisan organization dedicated to empowering citizens to get results in their community without having to be an elected official. If you visit our website, thecitizenscampaign.org, you can access our free video classes and a host of free downloadable guides, best practices, and other webinars and advanced trainings. We also offer this guide, Shining Light in Dark Spaces, which is written by the editor of Patterson Press, Joe Malanconico. You can download a free copy on our website, and this guide includes sections on how to cover local government and municipal budgets. The municipal budgets can be found on page 38. And you've noticed I've said free many times. Everything we do is free. Our books, our conferences, our webinars, we offer this for free. We ask that you pay it forward. Please share this information with your neighbors, your friends, your colleagues. Like us on Facebook, on Twitter. And if you feel so inclined, we would love to take a contribution. They are tax deductible. You can make that on our website, thecitizenscampaign.org. Now let me introduce you to our presenters for the day. Mark Pfeiffer recently retired from a 37-year career in New Jersey local government administration, having served as a municipal administrator in several municipalities, and most recently completed 26 years of service in the state's local government oversight agency, the Division of Local Government Services, where he served as deputy director for 14 years and periodically as acting director. Mark has broad experience in many areas of local government policy and administration, which he now uses as the assistant director at Blaustein's Local Government Research. He also provides extensive time to nonprofits and other collaborative efforts, including the Citizens Campaign, and we're very grateful. We also have Hank Callett. He has more than 20 years experience as a journalist, both in running a print and online publications. He was editor and managing editor of a local weekly newspaper. More recently, he was regional editor for some of the dearly departed Patch sites that we had unfortunate news of their closing yesterday. But now he is editor-at-large at New Jersey Spotlight, where he covers the economy and other local issues. He also teaches journalism at Rutgers and Middlesex County College. For today's presentation, Mark and Hank will be running the show. Please feel free to use the questions feature, and they'll go to webinar interface. And once they are done with their presentation, we'll open up to questions. So now I would like to turn it over to Mark Pfeiffer.
Okay, we're waiting for the handoff. Show my screen. And hang on a second. We got a little technology to do here. Like that. And we're in business. Good morning, good afternoon, everybody. The first thing I want to mention before I start is Heather had mentioned Joe Malanconico's book. It is an absolutely terrific resource. And if anybody, is going to be going forward and looking at municipal budgets or school budgets or dealing with, local government reporting in any way, download that book. It is an absolutely terrific resource. That said, my role this morning is to take about the next 20 minutes and talk to you about the New Jersey municipal budget process. It is something that I've been involved with for about 38 years on and off, and 25 of that as a regulator of the process. So we're going to walk through the process in the next 15 minutes or so. I'm going to turn it over to Hank after that, and then I'm going to be back where I'm going to get into the details of how property tax rates are calculated. So we're not going to do that in the first section here. So the first thing we want to do when we're talking about municipal budgets is deal with some definitions. The first thing is, well, what's this budget thing? And it, in official terms, it's the annual spending plan of a government unit. In government unit, I mean thereby it's a municipality, a county government, a board of education, or a fire district. We have some other ones out there, but those are the main ones that you're going to deal with. In New Jersey, all of our government units prepare their budgets in accordance with a state law. State laws govern the entire budget process. There is direction on how the government unit goes about calculating things, how it's presented to the public. It's all governed by state law, so there's always something behind what a local government does. The governing body is the municipal council by whatever name it may be. It could be the township committee, the borough council, a city council, a village trustees, whatever the form of government, it is the governing body. In case of county governments, it's our freeholders, and for fire commissioners, it's our board of fire commissioners. The word appropriation means an amount that is budgeted to spend for a specific purpose. That is the word, the appropriation. Following that, we have the term line item, which is the name or purpose of a specific appropriation. And when Hank's section, he'll be talking about a good deal of that, and you'll see that in action. Some more definitions. Fiscal year is the 12-month period covered by a budget. For all but 10 of our municipalities in New Jersey, they work on a calendar year, fiscal year, which runs January through December. We have 10 municipalities today, I think it's about 10, that operate on a state fiscal year, which runs July through June. We did at one point have over 50 municipalities operating on that state fiscal year, but that's been reduced over time. Schools run on a state fiscal year from July through June. All county governments run on a calendar year, as do all fire districts. Taxing entity or district, you'll hear this phrase, and that's a government agency that's permitted by state law to collect property taxes. And here we have the list of those, which are counties, and that can also include dedicated library, health, and open space taxes that have a separate tax rate on their budget. A municipality, which also can include open space, and a couple years ago we added a dedicated library tax. If you have your own library, there's a minimum tax that has to be raised. That used to be in the municipality's budget, but now it's just part of it. It's a separate tax rate by itself. School districts can be the local school district itself, or if the school is part of a regional board of ed, there will be a regional school tax. If your municipality has a fire district, and we have about 100 municipalities that have them, there can be a fire district tax. And in some cases, we still have a solid waste district tax. There's only about 15 or so municipalities that have those today. So some things you need to know about budgets. Number one, it's a fiscal plan. It sets the amount of property taxes needed to operate the budget for the fiscal year. And it provides high-level line items of appropriation. It also includes a listing of the revenues that are anticipated in the budget. A key element of the fiscal, let me say that again. The budget is a key element of the fiscal system that ties together the entire fiscal environment. So related to our budgeting process are things like the assessed value in a municipality. That's the total assessed property value, which goes into the calculation of the tax rate. Budgeting process tells the public and the government, okay, here's what we plan to spend our money on during the year. Here's where it's coming from. Property taxation, which is the process of billing, collecting, and enforcing property taxes. And financial reporting is the during the year process where the chief financial officer should be providing financial reports to the governing body, telling them how they're doing on the budget and how their revenues are doing. And after the end of the year, there is an outside audit firm that comes in and does an audit of the financial statements and practices of the municipality regarding the finances. So I mentioned before, there's state laws, and in this case, they dictate the format, structure, process for adopting a budget, and the timing. We do that for a couple reasons. One, with 565 municipalities in New Jersey, there's a lot that can happen. Over the years, and this goes back to the Great Depression, the state has found that left without oversight process, municipalities would tend to overestimate revenues to avoid raising property taxes, might underestimate appropriations in a given year, again, to keep a property tax rate down. We call that solvency. We want to make sure that every municipality has enough money to operate itself each year, and the same for counties and Board of Education. We want to make sure that they're raising enough money to cover all their expenses every year, and the state budget process provides that. The reporting system we use, which are the standard forms and oversight of the process, ensures that every municipality is actually doing that process. A third element that we have is debt limitations. There's a limit on how much debt any municipality, county, or school can issue. By that I mean long-term obligations that are guaranteed by the property taxes in the municipality. So the state has a rigorous process that whenever a municipality wants to issue debt, they have to file various forms with the state, and the state tracks that to make sure municipalities or counties or schools don't exceed their debt limitations. School budgets, like the state budget, are prepared prior to the start of the fiscal year, which runs from July 1st through June 30th. Municipal, county, and fire districts, however, are all prepared after the start of the fiscal year. And that's a very important element. And I'll talk a little bit more in a few minutes about why we do that. The cycle starts this way, however. The government's administration excuse me, I'm at the end of a cold and that cough keeps popping up. At the end of the previous fiscal year, about 2 or 3 months before the end, the administration should start planning what their budget's going to be for the next year. They're going to start amassing what their cost projections are. They're going to look at how much they actually spent during the current year, and they'll prepare that budget at what accountants will call the object account level, where they're going to go into a lot more detail in their internal documents than what the state requires to be presented to the public, where they may have line items that represent the amount of money that's spent on overtime, the amount of money that's spent on training. The state budget, the state level budget, will show basically 2 lines for each department, for example. So you may have the mayor's office, which may have a line for salaries and wages, which would cover salaries and wages for the mayor and any staff in the mayor's office, and a line called other expenses, which covers everything else related to the mayor's office, to include office supplies, any travel expenses, subscriptions, meeting costs, whatever. And that salaries and wage, or S&W, and other expenses known as OE, those are consistent throughout the budget for all departments based on the way a town is organized. So the state requires a less detailed form than schools as well. School budgets go into a lot more detail because there's a lot more interest that the state has in school budgets, and they work themselves out that way. So there's a slightly different process there. With most government agencies, the local auditor may assist in the preparation. For municipalities, counties, and counties, the budget is introduced, which is the first step, sometime between February and April. And until the final budget is adopted, which can be in April, May, or June, they operate on what's called a temporary budget, which is a resolution passed by the governing body in the first week of January, which allows them to spend money first for the initial 3 months, and after that 3 months is expended, they can appropriate additional funds to keep operating until the budget is adopted. Once the budget is introduced, which means the governing body takes an action to introduce the budget, they will then schedule a public hearing for it. It is a summary of the budget is published in the newspaper. The budget is then examined and approved by either the local finance officer and auditor or the Division of Local Government Service itself. Usually about 40% of the budgets every year are examined by the state. Every municipality has its budget reviewed by the state once every 3 years. That budget hearing has to happen at least 28 days after the time it's introduced. The idea is it gives the public time to look at the budget. That public hearing is then scheduled. The public has an opportunity to comment on the budget. The governing body then can amend the budget, which, depending on the extent of the amendment, may require another public hearing. But once that's done, they can then adopt it, which makes it the official action. A couple other details. Most municipalities are reliant on the state for what we call formula aid, or what now is part of energy tax receipts. But basically, it's state aid that is used to offset money that would otherwise have to be raised by property taxes. That number has been pretty consistent over the last couple of years. The state has effectively frozen the amount of aid that they get, but that number becomes official when the governor introduces the state's budget at the end of February. In reality, you may hear some towns that say that, they can't introduce their budget because they don't know the amount of state aid. That's sort of an excuse. They pretty much know what their state aid is going to be. There's a handful of municipalities that may attempt to file for what we call transitional aid, which is special aid for the most distressed municipalities, and they go through that process, and that number isn't available usually until April or May, or sometimes a little bit later, depending on what's going on in Trenton. But the idea is this municipality still has to introduce its budget on a timely basis. There are state rules and state oversight procedures to ensure that the local government cannot overestimate revenues. They make sure that doesn't happen because that's a key area where a budget can be mismanaged. The municipal budget also has a line item in it that's called the Reserve for Uncollected Taxes. That's an appropriation amount that's raised in the municipal tax levy, but it is to ensure that the municipality raises enough money to cover the tax levies of not only itself, but the school and the county. Because in most cases, municipalities rarely collect 100% of their property taxes. In accounting terms, it's basically an allowance for bad debts. But we can take the example of if you're going to bill $1 million in property taxes, but you only collect 95% of it. And state law requires that the municipality is the tax collector for the school and the county. The school and the county are guaranteed their full levy. Right? If you've got a 5% shortfall, what the state does is require the municipality to raise that additional 5% as an amount to make sure that the school will get its full levy, the county its full levy, and of course the municipality itself. So the tax collection rate of the municipality becomes very important because that's what drives the amount that's raised in the Reserve for Uncollected Taxes. Each municipal and county budget has what we call a capital budget. It is an estimate. It is not binding, but it is part of the municipal budget and is required as a means to ensure that municipalities will think about their long-term needs and show the public what their estimates are for long-term capital facilities, be it equipment, be it physical improvements to the infrastructure, such as roads, sewers, or water systems, or new buildings that they have to build. That would also include road maintenance, for example. The tax levy itself is the amount needed to balance the budget after you look at all state revenues, including surplus, and you look at how much you're going to spend. So you take your total expense, your total planned appropriations, and you deduct all your other revenues, and the amount that's left over is the amount that is raised by property taxes. Some other current issues that you need to know, that you want to know about, is that every government agency, schools, municipalities, counties, and fire districts are subject to property tax levy caps. We currently have a 2% levy cap. There is also an appropriation cap, which dates back to 1977. Those are still, they limit the amount that a municipality or county can raise and spend. The levy cap came in 2007 at 4%, and Governor Christie and the legislature changed in 2010 to be 2%, with very limited exclusions on that. The impact on a given municipality is widely varied. Some municipalities have been able to work with the cap without too much of a problem. In some municipalities, it's a real problem to get by every year on that. We have the employee and labor cost environment. We currently have binding arbitration for public safety, which is police and fire contracts. In 2010, a law limited the overall cost increases on an annual basis in year-to-year contracts at 2% over the prior year. That law will expire in April, but for the most part, that has played a significant role in limiting increases in employee costs to municipalities. As a result, over the last couple of years, and partly due to the recession starting in 2007, municipalities went through a round of layoffs, freezes, and occasionally employee furloughs, where employees were just basically said, we're not going to pay you for 2 weeks, so don't come to work, which effectively reduced their salaries for that period of time. The final big issue has been pension and health benefit cost challenges. Laws passed in 2011 made major changes. It required all public employees throughout the state to start paying a percentage of their health benefit cost. It was a 4-year phase-in for most employees who were working for a government agency in 2011. New employees have to go and pay their full percentage based on their salary immediately. But for other employees, there was a 4-year phase-in, and that 4-year phase-in depended on if you had employee labor contracts. It's when those contracts expire. So if you had a contract that expired that was already in effect in 2011 that started at the end of 2012, that phase-in started when that contract expired. So those employees will be paying on a 4-year phase-in starting in 2013. A couple quick things on property tax bills. Tax levies of all local units, once they adopt their budget, are certified to the county tax board. It's the county tax board that sets the rates and authorizes tax bills to be issued. Tax bills for all taxing units are issued by the municipal tax collector. As I said before, the municipality must turn over 100% of the tax levy for the school, county, and fire district. And if you get into the school budgets, the school tax levy for a given calendar year is based on 50% of the prior year's school tax levy and 50% of the current school year's levy. That needs to be done because schools work under that state fiscal year basis. Fire districts have a public referendum on their budget the third Saturday in February. They are the only government agency left that requires a public vote on their budget, and those are often controversial because a lot of people don't come out to vote. Governing bodies can transfer, municipal and county governing bodies can transfer money between line items, but they are limited to the last 2 months of the year and the first 3 of the following year. Boards of Education can transfer money between line items at any time. Budget amendments, which means if you get a new revenue, that can be added to the budget by a resolution of the governing body once the budget's been adopted. And audit reports are filed with the governing body halfway into the year. So 6 months after the close of the year, the municipal auditor is required to file an audit report with the council. Following the submission of the audit report, the chief financial officer is required to issue a corrective action plan, which provides the response to any issues that the auditor raised. I'll also point out that the audit report, sometimes known as a comprehensive annual financial report, or a CAFR, is a source of a lot of good information about the municipality or Board of Education or county. Has a section of statistical information that is worth taking a look at. That is the end of this portion of the presentation. I'm going to turn it over to Hank, and he is going to talk about some of the details of how you report on a budget. Hank?
Thanks, Mark. I'm going to present for you the kinds of discussions that I've had with reporters that have worked for me over the years, the guidance that I've given them in terms of what to look for and how to focus their reporting so that they're writing about more than just numbers, so that the budget stories that they would write would be of interest to the people who are reading the papers, who are paying the tax bills, who are using the services in the community. So Mark did a good job of giving you an overview of what a budget is and what's included. So what I want to talk about is what needs to be in a budget story. You guys are citizen journalists, but you should be thinking about people who will be looking at what you end up writing. So what needs to be in a budget story? First of all, you need to tell people how, what the size of the budget is. How big is this budget? The South Brunswick budget that I'll be showing you, mostly because it was easy to get our hands on, it's about $48 million. How does it compare to the previous year? The 2012 budget was very close. It was about, it was a little bit less also about $48 million. You're going to need to talk about tax rates. How much is the tax rate on the municipal tax rate? There are multiple pieces to the tax rate. There's a municipal tax rate, there's a school's tax rate, and there's a county tax rate that will be on people's tax bills. When you're writing specifically about the municipal budget affects only the municipal portion of the tax rate. But what is that tax rate? How does it compare to the previous year? You're going to want to also provide a calculation of what an average tax bill might look like. What I mean by that is you're going to find out what the average residential housing assessment is in town. Or you're going to identify several fairly typical houses with their assessments, and you're going to calculate the tax rate based upon that. I think Mark has that calculation in a later slide, so we'll show you that later. And you should do the same thing for the previous year so that you can give people an indication of what the impact is. Your average tax bill is going to go up $100 or $200 or $400, or maybe it'll go down, I don't know. You want to then take a look at the areas where there are the largest spending changes, both increases and decreases. And the reason I say largest changes, and I'm talking about dollar amount, we initially think in terms of percentages, but if it's a small line item in a budget, if it's a $2,000 line item that goes up by 100%, we're only talking about an increase of $2,000 in spending. But if you have an $8 million police budget that's increasing by $1 million, that's a 12% increase. While the percentage is much smaller, the dollar amount has much more significance. You're going to do the same thing with changes in revenue. Where are the changes? And you're going to ask questions about, you're going to try and find out what's causing those changes. You want an overview not just of the surplus used in the budget, but of how the surplus has been used in recent years and what that has done to the overall surplus account. And you're going to want to also provide an overview of the debt, the amount that's being repaid, the amount that's still out there. And you're going to want to summarize this material in a story. This is just a journalistic practice. Make sure you let people know specifically how many layoffs, new employees, new programs, etc. Now, it's important to remember budgets have two halves. It's not just about what's being spent, but what's also coming in. On the revenue side, as Mark said, this is basically anything coming into the town or the school district or what it is, whatever entity it is that you're writing about. So any money that's coming in is your revenue. Any money going out is the appropriations. So it's in terms of what to look at revenue-wise. Right? Okay. One thing you should be looking for, in addition to large changes, are what we'll call one-shot revenues. Those are items that do not recur from year to year. And the reason these are important is that they inflate the amount of non-tax money that comes in, and if they are not accounted for, if they are not offset in the next year, either by spending cuts or some other kind of revenue, it has to be made up by property taxes. So the question you want to ask when you see something like that is, how does the governing body plan to replace that revenue in future budgets? I'll give you, bear with me on the side here. Here's, by the way, here's an example of the summary sheet for revenue, just so you know. Here's an example. If you take a look down, there's several items here. If you look, reserve for health plan, the South Brunswick had set aside $232,000 in 2012 as a reserve for its health plan. It set aside $136,000 for an interfund from state and federal grants. It set aside $280,000 for landfill closure, $550,000 for affordable housing chargebacks. That was 2012. If you look at the numbers in 2013, those are all zero. You go to the bottom of this page, what you'll notice is they raised $6 million in this kind of miscellaneous revenue in 2012. In 2013, they're only anticipating a little less than $4 million. The question this raises is, how do we make up this gap? The other thing that you really need to pay attention to is surplus use. Surplus is the difference between what is spent by a town or another taxing entity and the money that it raises. Okay, so over the course of the year, if it's planning to if it spends $48 million and raises $50 million, that's $2 million that are generated in what we call surplus. That accumulates from year to year. If you think about your savings account, that's essentially the same thing. The money that you would earn from a salary, the money that you would have going out in bills, the money that's left over is your personal surplus. Think about that for municipalities. Key thing to note is if surplus accounts are shrinking, especially over a longer period of time, it means that towns are spending more money than they're taking in, and that could result in fiscal problems down the road, tax increases or other issues. Here is this is the appendix to budget statements. This is the sheet that shows you how the surplus is being used. If you look on the right-hand side, you'll see what the surplus balance is for, this is South Brunswick. For the year 2012, the beginning of 2012, South Brunswick had $1.7 million in its surplus account. And it used, used $1.3 million, okay. Oh yeah, I'm sorry, I'm looking at the wrong line item. Surplus balance. It used, well, we used about 1.3 million, I guess. The year before it used, I have to apologize. I've lost my thread here. Okay, in 2013, it was planning to use $2.2 million of the $2.9 million surplus balance, leaving it with $700,000. The previous year, it used a significantly smaller amount, so there was an increase in its surplus account by the end of the year. These things vary from year to year, like I said. If you can collect multiple years, you will be able to take a look and see what has happened over time. It is going to vary. There are going to be years like this where it does go down 1 year or go up 1 year. But if you're looking at 3, 4, 5 years and it is tracking in the same direction for the most part over that time, that's something that you need to be concerned about. Okay, on the appropriation side, the spending side, watch for large dollar changes. That, if you have a budget that's increasing by $1 million and the police department line item is increasing by $500,000, that's the bulk of this. That's probably the bulk of the spending that's driving your tax increase. Watch for new spendings, areas that may not have existed in the previous year budget. Okay, and watch for expired programs. Okay, and those are similar to what I showed you before. Now, the departments in most towns that have the largest line items, police, public works, trash collection, those towns that still have municipal library accounts, South Brunswick, for instance, has a line in its budget. It's outside of the cap for municipal library spending. Some towns will spend more than the state requirement on that, just as an aside. Insurance costs, pension contributions all tend to be the largest items. There are others, so you'll have to keep an eye on it. You'll have to go through your budget line by line to see. And always take a look at what's happening with debt service. Debt service is the amount set aside to pay interest and principal. So all of the money that's been borrowed in the past, this is where the repayment shows up in the budget. And I can show you that here. Okay, if you look at the top here, payment of bond principal, payment of bond anticipation notes, interest on bonds, etc. There was a reduction here from 2012 to 2013 in South Brunswick. So again, one of the overall, if you look at the bottom, this is the total amount of debt service that's paid. You're going to want to ask your municipal manager, your mayor, why is it down? Why is the amount being paid back in debt down by about $300,000? Debt expires, as anybody who has a house and a mortgage or a car payment understands. And then the other question is, are there plans to borrow for other items? This is something that will be contained in the capital budget, as Mark said. But the capital budget is often just a wish list, so you need to really pin your elected officials down and ask them, what is it that you're actually planning to do this year? And finally, the numbers in the budget are only a starting point. They are, they're just numbers. What you need to do is to use those numbers to begin a dialogue. You need to ask questions. And one last tip. If you can, if your town provides a copy of its larger budget workbook that makes it public, either in a municipal manager or administrator's office or the public library, you should look at that. That offers much more detailed information than the document that is usually provided to the state. So if you can get your hands on that, get your hands on that. If you can't, review the numbers that you see in the municipal budget and ask questions. And ask questions until you get the answers that you think are required. So now I guess I will send it back to remember how to do this. Give it a second. I have to. Okay. I think I'm sending it back to Marco. Did you get it?
Yep. I'm good. I'm just going to do my little thingy here. Okay, so that was a quick run through on what you need to look at in the budget. I want to reemphasize one of the things that Hank said, is that the question you want to be asking is why. If you're seeing a number go up, the question is why is that number going up and what are its implications? And let me get into
You there, Mark?
Mark, are you losing internet connectivity? Apologize, folks. Mark, we cannot hear you. Maybe try calling in on a landline. Mark? Hey, Hank, while we're waiting for Mark to get on, we have some questions that we're getting, so maybe I'll throw it to you for some questions until we get Mark Pfeiffer back on the line. How about that?
That works, so that's where we'll keep it going.
So one person asked, where can one find their budget?
Your municipality is required to provide you with a copy of it. They may not provide you with a copy that you can take home, but you can always review the budget at your clerk's office or at your municipal manager's office. For school districts, I believe if you visit the school district business office, you can get the same kind of thing.
This is Mark. Can anybody hear? Am I being heard yet?
All right, you're back on.
All right.
Welcome back, Mark.
But maybe
no
Mark
idea
can,
what happened. Sorry about that.
Well,
I heard that you couldn't hear
also,
me. I was trying several things. Do you hear me any differently from before?
No, you sound crystal clear.
Okay, very good. All right. So did you hear anything from me? Because I was talking for a little while.
We didn't hear anything of your presentation.
Okay, then I'm going to start.
Do you want to just run that question past Mark as well, because he may have some additional...
Yeah, well, we were asking where can one find their budget?
Okay,
where does one get a copy?
Yeah, once the governing body introduces it, they're obligated to put it on their website and also put a copy in the municipal library, if they have a municipal library. They don't have a municipal library.
Budget is a public record, just to make...
Oh, absolutely. Yes. Once the governing body acts on it, it is a full-fledged public record. The full budget, as many pages as it is also available if a member of the public wants a copy of it for free. They are entitled to a free copy of it. Okay. What happens is that they publish a summary in the newspaper, but if the member of the public wants the full thing, they can go to the municipal clerk's office and ask for a copy of it. Does that answer the question?
I think that's good.
Okay.
I'll save the rest of the questions for the end.
Okay. Okay, so let's talk about property taxes then, and we will move on from there. So I'm going to just jump right into this, and the idea here is to show you how the property tax rate and property taxes are calculated, right? So we need to know a couple of things here. One, the first thing is we need to know the term rateables, which is the total assessed value of all taxable property in a municipality. That number is obtained from the municipal tax assessor, county tax board. There's a document that the county tax board puts out called the Table of Equalized Value, which has the actual details that go into the calculation of all tax information leading up to the time that tax levies are set, or what's called the abstract of rateables, which is done at the end of each tax cycle, usually the fall of each year, which has all information about every municipality in the county and all property tax levies that were done for the year. The important thing to know about the rateables or the assessed value is it's not necessarily the market.
Mark, you're running into a little bit of a...
Of what? Can you hear?
Oh, now we can hear you a little bit better. Okay.
Okay. All right. The assessed value is not necessarily the market value or the equal. It's more the equalized. The equalized or market value is not necessarily what's reflected on the tax assessor's books. The numbers that go on the tax assessor's books are when the last real estate transaction happened, and those will not often reflect what's happening in the market. There's a small number of municipalities in the state that actually update their assessed value every year to reflect market value, but most municipalities don't do that. But the important point is it is the assessed value, it is the total taxable value in the municipality. The second concept we have to deal with is the tax levy, which, as we've said before, is the amount to be raised from property taxes needed for the budget of a taxing district. And as Hank showed on his chart, it's the total budget minus state aid and all other anticipated revenues. It happens at the end of the budget deliberation process of the school board or municipal governing body or county freeholders. And finally, we have the tax rate, which is the amount that a property owner will pay in taxes for each $100 of the property's assessed value. That $100 becomes very important, all right, because there's some math we have to do to get the assessed value to show that we're looking at a tax rate that's based on for every $100 of assessed value. So now that you have this information, what are you going to do with it? Well, the first thing you do is find the tax rate, and that's just in theory, it is a quick, easy division. It's the tax levy divided by the amount of ratables in the municipality for the year. So in a very simple example, if you have $5,000 in ratables and a tax levy of $75, you divide 75 over 5,000, which gets you to 0.015 cents per penny of assessed value. But because we don't count taxes on per penny, we do it 100, we're going to multiply that by 100 and get $1.50. And we do that, again, because the tax rate is applied not to every penny of assessed value, but to every $100 of assessed value. So we're going to make it a little more sophisticated now. We're going to use something that's almost real life. The tax rate equals a tax levy of $345,649, which is obviously a really low number. Excuse me. And then we divide the amount of ratables into it, and we get a tax rate of 0.034999 per dollar of assessed value. But we're going to multiply that times 100 and get 3,499, and we're going to round that to $3.50 to get a tax rate per $100 of assessed value. So that is our tax rate for the taxing district. So now what does that mean to a taxpayer, somebody who owns a home? Well, what you may want to do is use the effect of the budget on the average single-family home in the municipality, and the tax assessor should be able to give you a reasonable estimate of what that assessed value is. So at that point, we're then going to take that average assessed value, and here we're going to do our calculation of 100 a little earlier in the process. We're going to divide that average assessed value by 100 to get it down to per $100 of assessed value times the tax rate, which the tax rate we said was $350. And for example, average value is $200,000. Tax bill is $200,000 divided by 100 times $350, which is $7,000 tax rate. Tax on that particular property. All right. If our tax rate from the previous example is $350, home value is $200,000. Take the $200,000 divided by 100, multiply the result by $3.50, and we have $7,000 as the taxes on that parcel. All right, I'll give you another moment to just look at that. And then the question is that enough? No, it's not. Because if housing values in the municipality, you may want to, for example, on 2 or 3 different housing prices. 90,000, 250, maybe one municipality higher, to 500 or 750,000, to your readers or your viewers of what may happen to their tax bill. And a couple other things. The county tax board is the entity that sets the official tax rate for each taxing district based on the adopted budget levy. The municipality or the Board of Education doesn't set the rate. It's done by the county tax board, and it's their math that counts. Now, you want to find the total property tax. Well, remember we said we have each taxing entity sets its own.
Mark? Oh, Mark? Can you hear me, Mark? Mark?
I think we lost him again.
Apologize, folks. Let me just see. Let's check on the questions until we have Mark back. Again, for anyone listening, this presentation will be made available as a video, and we can send copies of the PowerPoint presentations as well for anyone who needs it. Let me just I know, Hank, you might know the answer to this. Who decides if a line item is outside the 2% cap?
That is usually governed by state law. It's a very detailed, the law is very detailed in what is allowed to be included and what is not included. I know that there are, I can't say specifically what falls into what does not these days, because that's changed periodically. But for instance, I believe municipal library costs, because they are set by a state formula, are outside the cap, for instance. Almost everything else, I think, falls inside of it. But again, that's something that's set by state statute.
Can you explain what deferring school taxes does for the municipality?
Meaning?
My town this is the question posed, my town defers 50% of the school tax each year, and it's very hard to explain the impact.
I believe that's a standard. Again, that's probably something better for Mark to explain. But the deferral, I think, has to do with the fact that school districts are on fiscal years and municipalities are on calendar years with their budget. So when tax rates are struck, that has to be taken into account. Mark probably can better explain that than I can.
Okay. Do you know, do municipalities have to have a public hearing or some sort of discussion on a municipal audit?
I don't know about the audit. I know that they are required to have hearings on the budget itself. They usually do make a public presentation on the audit. Whether there's a required hearing, I don't know.
Okay, one
you guys
second.
are catching me with all the legal stuff.
Hold on. I'm texting Mark the phone number. Okay. Sorry about that. Let's just go back to some more of these questions. Let me see here. Let me see if I understand this question right. A deferral basically means the municipality borrows the taxes due to the school district for a month or two, and then gives the municipality quick money to spend, but they have to make it back up to pay the district?
I'm not quite. I don't think I'm understanding the question. There's a statutory date on which they're supposed to pay the school district from the money that they've collected. Let me just say that I haven't come across that in the towns that I've covered before. It really hasn't come up.
I think am I?
Oh, we almost had you.
Oh, am I here?
Mark, you're back. Welcome back.
I have to apologize. Apparently, my internet.
Oh. Mark, can oh, I think we lost them again.
No.
No? No? Oh, wait, Mark, are you there? All right, Mark, I think we lost you again. Another question on budgets. In my township, our township council often does not adopt a temporary budget until September, October, and the final budget is not adopted until October, November. Is this a timeline codified by the state?
Is this a fiscal budget? Because or is
This is
what calendar is the municipality on?
this is Mount Holly. I think I'm going to go on a limb and say they are
One of the fiscal budgets?
January to January budget year.
They have to. The purpose of the temporary budget is to provide funding until a regular budget is put in place. And most towns will do it on a month-to-month basis, and as they get closer, they'll start to adopt temporary budgets on, say, by a weekly basis until they get a budget put in place. It's hard for me to imagine a town waiting until September to introduce a temporary budget, because that would leave them with about 8 months of no funding. They're not allowed to spend without the budget in place. That's what makes me think that this is probably one of the fiscal budget towns.
Okay. They say January to January. Or they're just really early on there.
It seems odd. I mean, I don't have a lot of familiarity with Mount Holly, so but it does seem
All right.
to wait that long.
Oh, wait, do we have Mark back?
I think I'm back on my cell phone now.
Welcome back, Mark.
I'm terribly sorry. If you want to proceed, can you put up my slides?
Hey, Mark, turn the volume off on your laptop, on your computer.
Let me pull my sound off. Hold on a second.
You just
All right, that should do it.
got it? Okay.
That should do it now.
Mark, do you have your, we can still see your screen on your computer if you want to bring it up.
Okay, that's really weird that you can still see my screen and I couldn't do audio. That I can't quite explain, but hang on a second. We can do that.
Okay, we're back. So we didn't hear anything that you said on this slide.
Okay, I apologize for all this. I'm not quite sure what was going on with my internet here. Plus the fact that I have to talk on my cell phone to talk to you, so that's really weird. So at any rate, whoa. Hang on. Okay, I think we're good now. All right. So we take the math that we did before, and we do the math for each taxing district. So we had a tax rate, because the county tax board, or we wanted to calculate it based on the levy that we know they adopted in their budget, or that they actually they were going to do. We now just basically take the tax rate for each taxing district. We took that $150,000 property, we divided that by 100 to get our assessed value so we're per $100 of assessed value. And we take our tax rate that we calculated individually for each taxing entity. So for municipal, the tax rate was what we said that I arbitrarily chose was $1.23. We get a property tax for the municipal purpose of $18.39. Local school, regional school, county government, there's a municipal open space tax levy in this town. So we get a total tax rate of $4.06 and a total property tax bill of $6,093. And you can just redo that math again for any tax rate or any assessed value and find out what the property tax bill is going to be for that individual parcel. Another key concept, and this becomes important to governing bodies when they're discussing their budget and preparing their budget, is how much additional money is raised if they raise the tax rate 1 cent. And you'll hear the phrase a tax point. Right? And a tax point is the same as a penny. In order to, so that's telling the governing body, if we raise our tax levy by so much money, it will increase the tax rate by so much. And as you can imagine, that becomes very important to a lot of governing bodies. So in order to calculate how much the tax rate is going to go up based on a tax levy increase, is that you want to get the total rateable, that taxable or assessed value from the tax assessor. assessor or the county tax board. In this case, we're saying it's $330 million. Divide it by 10,000, all right, which is moving the decimal point 4 places to the left, all right, and that gives us $33,000. So it's dividing that $330 million by 10,000. We just move the decimal point 4 places left, and we get $33,000, which means for every $33,000 they raise in the tax levy, it's going to raise the tax rate by a cent. All right, and that division just basically gets us to that math of when you're doing it when you're dividing, you're doing a penny on the bill. That's just the way the math works out.
And just let me just jump in. The reason this ultimately is important is that as municipalities move to cut their budgets to try and keep the tax rate down, these are the numbers that they have to work with. So if they cut $10,000 from the budget that Mark provides as an example here, that's not going to have an impact on your local tax bill. They have to get much, much closer to that $33,000 in order to have a real effect.
All right, and you also have, and keep in mind, and that the other confounding factor that comes from municipalities after thinking about the tax levy cap, that they can only raise their levy by so much each year, and that's a calculation. I should point out that there's as part of the municipal budget submission to the Division of Local Government Services, there's a levy calculation worksheet that they have to submit, which basically the chief financial officer does to calculate how much they're allowed to raise their tax levy. And there's a detailed calculation on that the CFO should be able to get from the town. Right? If you go in, and actually I should tell you that sample documents, like for example the budget form, the tax levy calculation worksheet, and other documents are all available on the Division of Local Government Services website. And I will put that up on here momentarily. If you give me a moment, I will just put it up in here. Give me a moment here to make sure that's right. Let's see here. All right, it's not going easy, so just to make sure I give you the right information, if you go to nj.gov/DCA, from there, there'll be a link to Division of Local Government Services. And from there, under programs, municipal budget information. And you'll see all the forms that government officials use to prepare their budget. All right, so Heather, I think that's it.
Okay, and I do apologize. We've run a couple minutes over, but I know we do have some questions, and this has been recorded, so hopefully anyone who had to log off for, if they're on their lunch break, you can always revisit the video. But I'll take some time right now to pose some of the questions to you guys. So one question was asked earlier, Mark, that we were debating was a town that's on a January to January budget cycle, but they often don't adopt a temporary budget until September or October, and then the final budget is adopted in October, November. Does that sound right?
No, it doesn't. There is likely a temporary budget that was adopted. Everybody adopts a budget in January. The only place I can think of off the top of my head that gets into that much trouble of late is the Newark. Where Newark gets into difficulty because of state aid issues and the politics of Newark. But there should be a temporary budget that's done in January. The challenge may be the government doing what they call emergency temporary budgets to fund after the 3 months. If you find a municipality that's doing something like that, that doesn't seem to be extending its temporary budget, your best resource there is to call the Division of Local Government Services or the DCA press office and find out from them, ask them the question, and hey, say, hey, the town I'm covering doesn't seem to be doing its temporary budget. Can you give me some direction on that? You do have cases, however, and Newark has been one of them, and occasionally get other municipalities. I know that Wildwood, goes the other end of the state, has had this problem on occasion, that they don't get their act together to adopt their final budget until the last quarter of the year, and they'll be operating on that temporary emergencies until they adopt. Those are outliers. They are very unusual. It usually happens because of some local political problems. The Division of Local Government Services is normally actively involved in them and pressuring them to take action to make that all happen. So if you've got a case like that, contacting the DCA press office and asking what the division is doing about that municipality is probably a reasonable thing to do.
Great. Another question, one of our attendees, I'm interested in comparing municipalities based on their development patterns, i.e. ratables available from residential versus commercial properties, plus consideration tax-exempt properties. Is there a straightforward way to conduct such an analysis?
That would be, from my standpoint, that's kind of difficult because there's a lot of variables there. The county tax board is a good resource because they'll have information about the breakdown of commercial versus non-commercial properties in town. And they can give you some data on that and show you the change. You can look at you can get prior years data and look at how towns have changed their residential mix. If you go to the Division of Local Government Services website, they have information on property taxes. And if you find the property tax link, there are files there that show the breakdown of types of property in each municipality as well, and that goes back for a number of years.
If the county tax boards usually publish what's called a tax abstract, which goes town by town and breaks down a lot of the assessment information. The access to the to tax-exempt information, though, is much more difficult. So, and that you may need to go into the individual municipality. So if you were writing about Princeton, for instance, and you wanted to see how much property Princeton University owned in the larger town of Princeton, you're going to probably need to go line by line through the tax books and identify what's Princeton and what's not. I don't think there's anything published.
No, that's not published. You might be able to request it in an electronic form, and depending on how the system that the municipality uses to maintain its information, they may be able to give you a printout. So what you may want to do is talk to the tax assessor, if you can, to see how you could get a list of tax-exempt properties, or do an open request for it and see what happens.
Great. Where are all the official property tax rates noted? Would that be the county board? And what is the cycle or timing of when they're made available?
That's often challenging. The county tax board produces the county abstract of ratables, the document that Hank was just talking about. That's usually done in the fall of the year, and they publish that. They'll put it on their website. Many county tax boards will put the individual tax district tax rates as they're done on their website, and you can always ask them for up-to-date information. The state aggregates all that information. The Division of Local Government Services usually does it, but that information usually doesn't get posted until January or February of the following year when that information goes up. Because when that information goes up, it usually creates a spate of press stories about what's happening in average property taxes, which usually governor's office have to then respond to. The Division of Taxation has a local property branch with statistical information. They post individual county abstracts as well. That doesn't do the math for you. That just shows you the information. Sometime in the middle of the year, the Division of Taxation will post equalized tax rates and general tax rates for the following year, but that's like 6 months after the fact.
Another question.
Just to go back to the tax-exempt status issue, sometimes properties will be declared tax-exempt, but those properties, the owners of those properties or the organizations involved with those properties will be making what's called a payment in lieu of taxes. So money will be coming in from those properties, but they will not be identified as property taxes. That money goes in and the municipality gets to keep all of that usually. So that's another thing also, just to bear in mind if you're looking at tax-exempt properties.
Okay, so one of our participants here serves on their local Citizen Budget Advisory Committee, and they're wondering, as they start reviewing their budget and have questions, they happen to be in a town where the mayor and the council are at odds and don't get along. Who is it better for them to go directly to in their recommendations and in discussions, the council, mayor, or department directors?
Depends on the government, I think. Because the budget's in a mayor-council form, the budget is the mayor's budget until it's adopted by the council. In a council-manager form, my understanding, my memory of this is, it's the manager's budget until the council acts. So a lot of it is going to depend on the form of government in place.
Right. I think that the question gets answered as to where in the stage the Citizen Budget Committee is working. If they are reviewing the budget prior to the budget being introduced by the governing body, or in mayor-council forms of government before the mayor hands it over to the council, it's going to be the mayor or the administration. But once the budget is introduced, that's fully the governing body's prerogative at that point.
Okay.
It is if it's a township committee form of government, then
yes. It's all in one.
Yeah, then you have to kind of just find somebody who's willing to talk, because the committee is both the administration and the policy body.
Great. Just a couple, I think we may have covered some of these, but just want to reiterate. Do all towns fill out the same exact form? I know you brought up a form before for South Brunswick, Hank. Is that the same form for every town?
The state form is the form that every town uses. Some towns will use their own internal forms to develop their budget. And the backup to the budget, really, the town isn't obligated to disclose the backup to the budget until the final budget is adopted, because those are considered to be work-in-progress documents, and they may reflect labor negotiations, strategies, and things like that. So you're not necessarily going to see it unless the town decides to make it available. Some towns do a really good job in providing backup information up front, and more towns are starting to do that. I know Livingston Township, for example, does an incredible job of providing good, detailed information about everything financial that's going on in the town. But that's not required to be displayed, and every town will do it using their own forms. But at the end of the day, that state form is the requirement that they will have to use.
Great. And is there a deadline to submit that form to the date, to the state?
The Division of Local Government Service, the statutory date, believe it or not, is you're supposed to have actually all budgets adopted by the end of March. But
Okay.
that law goes back to the 60s and is something that's pretty routinely extended by the Division of Local Government Services. There is no hardcore enforcement. The budget has to get introduced at some point. The Division of Local Government Services will lean on municipalities that haven't introduced their budget by, say, April. They'll send them letters telling them, hey, get your budget introduced, right?
Mm-hmm.
Here's something also. If you go to, and unfortunately my internet is down, But if you go to the Division of Local Government website, you're going to find that there is a newsletter called DLGS News that you can subscribe to. It's just a listserv. But once you're on that, you'll get all the information that goes out to local officials as well, which will keep you up to date on budget information and deadlines and things like that. So every reporter should get on that DLGS News listserv.
That's great. Well, thank you so much, guys. This has been very informative, and I apologize for our technical difficulties, and we ran a little bit over, but I think everyone found it to be a really great conversation. We have some upcoming events, which I invite everyone to join us. We have another webinar on how to set up a blog February 13th. You can register on our website. We also have monthly meetups. Our first one was last week, and it was a great kickoff, so I invite you to come again. We talk about accessing public records, covering stories, just what's going on in our towns, trying to get a blog up. So it's a really great conversation with interesting people. And then there's two conferences that you may be interested in coming up on March 10th. We are hosting a Environmental Justice, Advocacy, and the Media Conference at Rutgers University. And our partners, New Jersey News Commons, are hosting a conference on open data. That's May 12th at Montclair State University. So again, thank you everyone for joining us. We will see you online in the near future. Thank you.